I want to welcome you all to the PPP Round 2 webinar. We are very fortunate to have what I want to call an expert in the field. He's been through it once and he's very versed on what's happening with the new PPP. And I want to thank Jeff Ball for joining us today from Friendly Hills Bank. Jeff is, like I said, has great knowledge about this, and he can walk us through the steps of what's in the new program and how you can submit your application and what specifically it's for. So Jeff, thank you again for being with us today, and it's all yours.
Great. Well, thanks, Carol. Very happy to be with everyone today and talk a little bit about the PPP program. Some of you were with us several months ago when we did this in the initial round of PPP. And so you're going to find that there's a lot of commonality between the new round as well as what we did before. So what I thought I would do this morning is I'm going to walk you through, probably take me about 30 minutes to just kind of walk through exactly how the program works and how the application process works as well. A lot of this is driven around applicants that go through our bank. It's all this information is true regardless of whatever lender you use. Other than when I get into some of the specifics about how we handle some of the different things. But our intention today is to try to give you a broad overview of the program and how it works so that you can feel more comfortable with the structure and move forward with your application. So I am going to share my screen. We'll just kind of wait and take questions at the end. And I'm happy to stay as long as there are questions. So we are in the Paycheck Protection Program, and this references rounds 1 and 2. And the reason why is because with the new program, there's some expanded eligibility, which means we do have some borrowers who are actually entering it for the first time as a result of new monies being appropriated for the program. So we're going to talk about application if you are just, this is your first loan and it's round 1, or also if you are coming back for more money in round 2. Everything that I'm presenting to you is based on the latest guidance that we have from SBA. It is common that that guidance will change, although given we've had this program around for several months now, we don't expect a lot of significant change. But everything that we're giving you is based upon the latest guidance that we have received. Before we dive in, a quick refresher on what the PPP program is. It is called the Paycheck Protection Program for a reason, because it is intended as a tool for you to be able to retain your employees. It is a loan that has a forgiveness provision, and we'll talk about the forgiveness provision and how that works towards the end here. But the point is that we want you to be able to keep your people employed, and we want you to be able to maintain your pay to those employees. It is a standardized loan program, which means, you know, there's really no negotiation here. It is a straightforward program, highly structured, and that's frustrating for us as a community bank because we take pride in being able to structure loans specifically for the needs of the client. But in this instance, it is a standardized program, and we have to make sure that we keep everyone compliant in an effort to try to maximize your benefits under the program. Any questions that you have, I will refer often, but we're always happy to take questions at our email address, which is apply@friendlyhillsbank.com. And that's a much more effective way to get answers to your specific question, as opposed to trying to call into the bank. We have a lot of employees that are working remotely right now. And if you send it by email, we have a team of professionals that are monitoring that account. And if you have a question that's in a particular gray area, then our employees have an opportunity to confer before we respond to you. So that's really the best way to come with your questions. So a little bit of an overview. We are back here again as a result of the Economic Aid Act being signed into law right at the end of last year. And it provided additional funding of just over $806 billion into a new round of the PPP program. It is already open, and it will be open through March 31 of this year. So you do have some time if you want to apply. And based on the amount of funding, we don't anticipate that these funds are going to run out. But it is on a first first come, first served type of a basis. So as I mentioned earlier, they are reopening round one. If you are a new borrower, there's some expanded eligibility. So we have some businesses that did not qualify before, but they qualify now. We also have some folks that for whatever reason chose not to participate, and after seeing how successful the program was, have now decided to come forward. And either scenario is absolutely fine. Round one borrowers have a little bit different eligibility terms than round two, which we're going to talk about now. Round one is pretty much expanded eligibility. There's not a lot, assuming you meet the size standard, there's really not a lot of further eligibility restrictions to be concerned about. And the maximum loan amount is 10 million. And that holds true even if you are a first-time borrower in this session of the PPP program. Now, many of you may have gotten your loan in the first round, and so this is where you're actually looking at round two to bring additional funds from what you borrowed before. And there are some more restrictions on that. First of all, you have to have fully used all of your funding from round one. It's not necessary that you have filed for loan forgiveness, but you have to have already used all of the funds in round one. Also, there are some additional eligibility restrictions that we're going to talk about in a second. And very notably, the maximum loan amount on second draws is now lowered to 2 million. Instead of 10 million, it's still 10 million for the first round, but for the second draw, it's now 2 million. The terms of the loans have not changed much at all. The amount that you qualify is based upon 2.5 months of your annualized payroll expense, and I'm going to help you with how that's defined in a moment. If you are in the hotel or restaurant industries, meaning that your SIC code starts with a 72, then you actually are going to have an amount based on 3.5 months, but that's only applicable for the second round. If you're a first round borrower, it's still at the 2.5. The notes have a 5-year maturity and an interest rate of 1%. There is no collateral required, no personal guarantees are required, but you are required to use at least 60% of the proceeds for payroll costs, and we will define that in a moment. It does have a deferred payment capability, so basically from the time your loan funds until you have received your forgiveness payment, you do not have to make payments on the loan, and it does have forgiveness terms for round two that are very comparable to what we had for round one. So let's talk about eligibility for round one. You first of all have to be a small business concern. 501c3s are eligible. We had quite a few that have taken part already in this new application process, and destination marketing organizations are also now eligible. You have to have fewer than 500 employees, and the measurement of your size and your employee base would include affiliates. So affiliates are typically defined by common ownership. And if you have any questions on that as to your particular situation, I encourage you to email with the specifics, and we're happy to take a look at it to make sure that you comply. Most of the clients that we work with are well within this limitation, but it's important to be aware of the affiliation rule. Independent contractors are eligible, as are self-employed individuals, sole proprietors, and partnerships. The stipulation is for all of these borrowers, you have to have been in operation as of February 15th of last year. Let's talk a little bit about an example of what businesses would not be eligible. If you were to exceed the size limitations that I previously described, that would make you ineligible. Also, if you are engaged in any illegal activity, now, most notable in this definition is the cannabis industry, because marijuana is still a classified drug under federal law. Therefore, any cannabis-related operation is not eligible for PPP. You cannot be primarily engaged in lobbying. It does not apply for household employers. So if you're employing a nanny or a housekeeper, you can't use it for that. If 20% or more of the equity in the business is owned by someone who has been convicted of a felony or has been indicted on a felony, then they are not, that business is not eligible. Also, if you had a prior default with the Small Business Administration on a loan within the last 7 years, you would be granted ineligible. There's one additional eligibility standard that has been brought in with this new round of funding, and that is within the Economic Aid Act is a special grant provision for venue operators. And so those venue operators who take advantage of the grant would not be eligible to also apply for PPP. And I don't think we have anybody on the call in that situation. Also, you are not eligible if you are publicly traded, if you have permanently closed your business, if you have filed bankruptcy, or if you have ownership through a hedge fund or a private equity firm. That could disqualify you. Now, for round two, we're using, so this would be those of you that have received funding already and you're now coming back for a second loan. There are some additional rules that apply. Everything that applies to round one that I just defined would be applicable. However, instead of 500 or fewer employees, it is 300 or fewer. And this is the big one that everyone's been focused on. You have to have experienced a 25% or more reduction in revenue between 2019 and 2020. Again, this is only applicable to round two if you're coming back for more funding. And we're going to measure that on a quarterly and an annual basis. As long as you have at least one quarter in which you experienced a 25% or more reduction in revenue, then you are eligible for the loan. If your revenue has not gone down under that definition, then unfortunately you're not eligible to come back and receive more money. And as I mentioned earlier, you have to have already used all the proceeds that you got in round one. So that is how we defined eligibility. And I've talked a lot about the fact that the amount you can borrow is based upon how much your payroll is. So let's talk about that right now. If you were with us in the first round, then you know about this process of looking at your payroll over a 1-year period of time to do the calculation. They are allowing you to use calendar year 2019 or calendar year 2020 as the basis for calculating the amount of your loan. This is pretty significant because for many businesses, the payroll in 2019 was higher than what it was in 2020. They're also, again, allowing you to look at 12 months prior to application. Now, given the fact that we're in January, it pretty much becomes calendar year 2020. But if you had significant payroll expenses this month, or you're anticipating some in the coming month, you might want to defer your application to be able to account for that additional payroll as part of your calculation. If you happen to be a seasonal employer, we again have a provision that allows for that so that we can look at any 12-week period between February of 2019 and February of 2020 and take that 12-week period and annualize it in order to determine what your annualized payroll base is for the calculation. So what is included in payroll costs? Well, there's really no change from what we had before. It's any cash compensation that you made to your employees, which obviously would include their wages with bonuses, tips, vacation, leave. It also, if you're self-employed, it has the owner compensation replacement that we did before. And if it's a partnership, income replacement for the partners. It includes any contributions that you, the employer, have made for your employees' health benefits or their retirement plans. Again, only the employer contribution. State and local taxes that you've paid. And remember, and here's another key part. It has to be at least 60% of what you use the money for, and payroll costs have to be that 60% in order to qualify for full forgiveness. So both of those extremely important. And as we had in the first round, documentation will be extremely important. Basically, any number that you're showing on your application, you're going to want to have documentation to support behind it. Let's talk a little bit about what is not included in payroll costs. First of all, if you have any employees that are outside of the United States, they would not be included. Also, if you have any employee whose base compensation is over $100,000 annualized, I'm not talking about benefits. We're talking about their gross pay. If it's over 100,000, any amount over 100,000 cannot be included in your calculation. Also, federal employment taxes that are imposed or withheld would not be part of the calculation. And lastly, if you have any employees with qualified sick and family leave wages that you paid and you got a credit under the first Coronavirus Response Act, then those costs would not be eligible as well. Now, I talked about the fact that you have to use at least 60% for payroll costs, which then suggests that there's another 40% that you can use the money for. And that is pretty much as it was defined before, with some additions. The interest portion of any loan payment that you make on a commercial mortgage for the property where you're doing your business, that would qualify as long as that mortgage was in place as of February 15th of last year. The same with lease payments that you may be making for the property that you use for your business, and also utility payments, all of which had to have been in place as of February 15th. And again, all of which we need to have documentation for. Now, there's some new ones that have been added for this next round. And this applies whether you're a first round borrower or a second round borrower. And that is, you can now use the interest portion of any loan payment. It doesn't have to be just for the commercial mortgage. Also, if you took out an economic disaster loan last year and you still have a balance on that, you are able to refinance that as part of this program. This is extremely important because that loan program does not have forgiveness in it, and PPP does. So by bringing that loan into the PPP loan, you then now have an opportunity to have forgiveness on that EIDL loan. Also, eligible costs are basically most anything for your general business operation, including any damage that you might have had from recent public disturbances. Certain supplier costs are now included. And also, if you have expenses that were related to personal protection equipment, or maybe you did some tenant improvements to make your property more receptive to have members of the public, or for your employees' safety, all of that qualifies as well. Again, at least 60% of the use has to be for payroll, and documentation is key. Let's talk a little bit about how your loan amount is calculated. The process is very comparable to what we did before. And for most business operations, it's a very straightforward formula. We're going to look at your aggregate payroll as I defined it before. We're going to exclude, remember, any compensation for an employee that's over 100,000 gets pulled out. And that is going to become your effective annualized payroll cost for the year. We divide that by 12 to make it monthly, and then multiply by 2.5 so that it effectively becomes 2.5 months of your average payroll. Remember, if you're in the hotel or restaurant industries, then that multiple is 3.5. But by doing that, we come up with your qualifying loan amount. You can add an EIDL loan balance to refi if you wish, and the end result is the total qualifying amount for a PPP loan. Now, something very specific in regards to the EIDL loan that I should point out. The ability to refinance an EIDL loan is only applicable if you are a first round borrower. If you're coming back for more money, unfortunately, that opportunity has already passed you. But if you are a first round borrower with an EIDL loan that you took out last year, then you'll be eligible to refinance that. So if that's applicable, you might want to send us an email just so we can verify for you. Now, the formula is very similar for self-employed individuals as well. You're going to take your Schedule C line 31 income, capped at 100,000, add any compensation to employees, subtracting any above 100,000, add your benefits, local taxes pay, and that becomes your annualized number, which then is divided by 12 and multiplied by 2.5 or 3.5 if you're in the hotel restaurant industry, to get to your qualifying loan amount. Same process as we had with other businesses. And if you're a partnership, it's a little more complicated, but the same structure. We take the net earnings per partner, deduct the Section 179 expense. And if you're a partnership, you're familiar with that number. That'll get you your partner earnings, adjust for self-employment tax. Again, the maximum of 100,000, add the compensation for any employees and benefits to get to an annualized payroll cost number, divide by 12, multiply by the multiple, and there you go. So pretty straightforward calculation. And we've actually put together some tools that can help you as you go through those calculations and look to make your application. And you're welcome to use this even if you're not going to be doing your loan through our bank. If you go to our website, which is friendlyhillsbank.com, we have a tab here for COVID-19 information, and under that, the Paycheck Protection Program. And in here, we have a really nice basket of tools for you to use as you're looking to put your application together. We have a checklist that lists all the different things that you may need for your application so that you can make sure that it's complete. We also have the application itself. There's a different application for a first round borrower as opposed to a second round borrower. So make sure you get the right one. We've also developed an Excel model for you, which we call our PPP calculator. And in this model, you can put in your payroll costs and also project how you intend to use the proceeds of the loan. And so that will help you in determining how much you qualify for and also choosing how much you want to borrow in an effort to try to maximize the benefit of the loan forgiveness provision. We also have some documents that we need from our borrowers, and we have all of the forgiveness application documents and instructions are here for you as well. So feel free to use that. Even if you don't intend to use us for your loan, it's all valuable information that you can use in preparing your application. Let's talk a little bit about documentation, because that seems to be the most challenging part of this whole process for a lot of borrowers. There's a lot of it, and effectively, we're going to need your Form 941 or your payroll processor records. Now, if you're doing your payroll processing through our bank, then it's pretty simple. You just call Tim and tell him what you're doing, and he knows exactly which reports need to be prepared and sent over to the loan side of the bank, or he can also generate for you to use with another lender. You'll likely need your quarterly state tax statement, as well as documentation of any payments that you made towards health and retirement plans during that period of time. Remember, in order to qualify, you have to have been in business as of February 15th. So there's a couple of ways we can verify that. One would be to look at your payroll records around that specific date. The other could be to look at bank records that show that you were in operation at that period of time. If you are self-employed, we'll need your Schedule C. Good news, again, you can use 2019. Most of you have not prepared 2020. I certainly haven't. So you can use 2019, but we'll certainly need a copy of whichever one you're using as the basis for the amount of your loan. If it's a partnership, we'll need your Form 1065, including the K-1s, please. That will be part of how we document the income around that. And always a question around this round 2 requirement of revenue reduction. We can certainly use tax forms if they're prepared, but I think most people will be using internal statements, and the SBA says that it's okay for us to accept your internal financial statements as justification of where your revenue levels were, either for the whole year, but you will need to provide it at the time you apply for loan forgiveness. We all know that the loan forgiveness application is a bit more complicated, so I highly recommend, as long as you're doing the calculation now for qualification, go ahead and have that documentation ready to go. Let's talk a little bit about loan forgiveness, since I just talked about that. There's really no material change to the process. There are shorter form applications based upon your loan amount, and that section on my website with the instructions can guide you through what helps you determine if you qualify for one of the shorter forms. It is going to be based on expenses that you had during the covered period. So what we're talking about with the covered period, it's effectively from the date that your loan is funded out to the end of time in which you have completely utilized all of the funds. And you have to do that within 24 weeks. So once you have fully utilized the funds from the loan, then we start looking at your loan forgiveness application. And you do have 10 months to apply for loan forgiveness after the end of that covered period, if you so choose. Although we encourage our borrowers to do it right as they get to the end of the covered period, while all of the information is fresh. And also, we want to speed up getting that money in so that your loan can be forgiven. As a reminder, there are no payments required until after the SBA has responded to your forgiveness application. So in some cases, we could have loans that go over a year without any required payment that's called upon. Loan forgiveness is based on a method that really should get everybody to full loan forgiveness. And that's our goal as a lender, to try to get everybody there. And it's achievable because if you think about it, your loan is based on 2.5 months of payroll. And even if you're in the restaurant industry or hotel industry and it's 3.5 months, the covered period is 24 weeks, which is almost 6 months. So you're getting a loan based on 2.5 months of payroll, and you have 6 months to use it. So unless your payroll costs are dramatically reduced, which means you're not using the proceeds for the purpose of the program, you should be able to get to full forgiveness on your loan. And remember, there's that other 40% that can be used for other purposes as well. There is potential for your forgiveness amount to be reduced if you lower your number of employees, or if you have a significant drop in compensation to certain employees. But again, you have that extended period of time to make up for it. So we anticipate most all of our borrowers will in fact be able to get full loan forgiveness. So again, that covered period is extremely important. After your loan is funded, it begins. It's based on the day that you receive the proceeds of the loan, not the day you sign the note, but the day that you actually get the money into your account. And it's going to drive many of the calculations that you'll be looking at as you track your payments from that initial period of funding out to as far as 24 weeks. 8 weeks is the minimum for the covered period that you have to work with before you can file your forgiveness application. And there is, again, the alternative covered period. If you were with us in the first round, you're familiar with this, but it allows you to adjust your covered period to fit with your pay periods if you have biweekly or weekly payroll. And that's very convenient because when you're doing the calculations with weekly and biweekly payroll, you got a lot of data points, and it's nice to be able to align those directly to the pay periods. It makes it a lot more simplistic. If you pay your employees twice a month or monthly or some other formula, we do have a model that we've developed that can allow you to take any specific pay period and break it down into components so that it can fit within the covered period for you. So let's talk about the sequence of events here for receiving a loan and going through forgiveness. First step is where we are now, and that is to apply for the loan based upon your annualized payroll as I defined it earlier. Once you have that together with your documentation, you will submit that to your lender, and that lender will review it, hopefully, before they submit it to SBA. In our case, we very carefully review each of the applications that come in to make sure that they're thorough and that they're complete before we submit it to SBA. I know I've heard not all lenders do that. I can't speak for the other lenders, but extremely important that you're reviewing your application. And I'm going to talk about that in just a moment. SBA issues a loan number, documents are sent to you, your loan is then funded, and the covered period begins. And that's the time when you want to make sure you're documenting how you use the money. It's not necessary to open a separate bank account in order to track this. You can certainly do that, but as long as you're keeping track of your expenses and documenting them, you should be fine, even if it's within your normal operating account. Remember, you got to go through and use all of the proceeds before you apply for forgiveness, and at least 60% of that has to be for payroll costs. Once you've completed that, at the end of the covered period, you will apply for loan forgiveness. That process is similar to the application. The bank will review it and then submit to SBA. And when SBA has accepted your forgiveness application, they then issue a credit to your lender for the amount of the forgiveness plus accrued interest. And at that point, hopefully your loan is fully paid off. So a few things to keep in mind as you go through the application. First of all, you are the one responsible for it. So make sure that you use discretion. Don't push the boundaries of the program. The lender has very limited responsibilities here. It really falls upon the borrower to make sure that their application is in compliance. There are representations and certifications that you will be making on that application. read them, understand them, know what you are executing, because the penalties for misrepresentation are significant. And as we all know, this program is very much in the spotlight. It's a lot of federal money going into this, and there's significant concern around potential fraud. Make sure you carefully, therefore, review your application before you submit it. Check to make sure it's accurate. Check to make sure that it's thorough. Feel free to use the checklist that we provide on our website. That can be very helpful to make sure that you have everything you need before you submit it to your lender. There are gray areas that always naturally come up because, again, we're talking about a standardized program. And my guidance to you in looking at different gray areas is to really focus around the interpretation of the guidance that's there, using an understanding of the spirit and the intentions of the program. It is to keep your employees on the payroll and to keep them paid at the same level. Focusing on the spirit and intentions of the program, there is conflicting guidance in there, but if you focus on the main intents of the program, then that should help. It'll minimize later scrutiny. And again, we always stress keeping the attributes of your application and your forgiveness consistent so that you're using similar expenses in doing that. Our objective as a lender is to get everybody through this as quickly as possible with full funding, full compliance, and full loan forgiveness. And I'm happy to say that so far with all of our round one lenders, we've had over half of them in which the forgiveness process is complete and their loans have been fully forgiven. But again, any questions you have, here's the email address, which is apply@friendlyhillsbank.com. If you have any questions, feel free to use it. Even if you're not borrowing through us, we're happy to take a look at something for you as part of our service to the community. So that concludes the comments that I had. I'm going to go back now to my screen here. Hopefully you can see me now. And Carol, that completes the comments, and I'm happy to take any questions with apologies for the background noise.
No worries. And Jeff, wow, that was a very thorough presentation. Thank you so much. For those of you who are listening, if you have a question for Jeff, please put it in the chat and we can address it while he's online with us. Jeff, I've had a couple of people ask me as we were going through the process and calling into the chamber for information that the payroll costs, it does include bonuses. It also includes mileage reimbursement or cell phone reimbursement, work at home reimbursement. Does it include cost for medical insurance? Can you put that in there, or can you go over one more time what all you can
Sure. Yeah, it's basically anything that's covered in your payroll expenses is going to qualify. So all of those expenses that you named are qualifying expenses under payroll. It's what you pay your employees. Okay. They want you to continue to pay them as you have. So it includes bonuses, absolutely. It includes any payments on health plans or retirement plans. But remember, it's only the portion that the employer paid. Okay. So let's say you have an employee, let's say your benefits are structured so that the company pays half and the employee pays half. Only the half paid by the company would apply as a payroll cost. Another common question that we get, Carol, is what about independent contractors? I have individuals who do work for me that I pay on a 1099. Those would not be included. That's not part of your payroll. They actually have the ability to apply on their own as an independent contractor, so those expenses would not be included.
Okay. We do have a question about when people can apply for the second PPP loan. It's
open now. Okay. So the process is ready. We've been submitting applications to SBA today. So it is open and ready. And that's whether you're a round one or a round two borrower, it's ready to go. Just again, make sure your application is complete and thorough. I don't think we have to feel as rushed on this as we did the first time around. There was a real concern about money running out. And in fact, it did run out for a period of time and they replenished. The amount that they have funded this program, and given the fact that there's the lower limits and the revenue restriction for second round borrowers, we feel pretty confident that there's going to be sufficient funding for this round. And that if it did run out, I think Congress would respond and replenish it as they did before. So I wouldn't be rushed in getting it. You want to make accuracy and thoroughness and compliance is more important than timeliness right now.
Okay.
You just don't want to get in a situation where the application gets the SBA and then it gets declined because you're locked in with that lender, and it's very difficult to go back and get it fixed. So you really want to make sure that it's 100% correct. We had 100% success in every single loan that we submitted in the first round, and it's because we went through the diligence with each of our borrowers to make sure that everything was complete. And sometimes that's tough. We're the bad guy that has to say, no, you need this, no, you need that. But at the end of the day, everybody got their application through and everybody got their forgiveness so far. So we think it's prudent to take those steps up front.
Yes. And just a reminder, just to confirm, March 31st is the date, right, that people have to apply.
March 31st is when, so March 31st is the last day that we as lenders can submit applications. So you really want to have it in at least, a few weeks before that to give your lender an opportunity to review it before they submit. So, but it's certainly not something that, has to get done in the next week, as an example.
Okay. And individuals should contact their bank that they have a relationship with to go through if they're not a client of Friendly Hills Bank, correct?
Yeah. So a couple of things in regards to that. First of all, you do not have to use the same lender. So if you are not happy with your lender in the first round, you can use a different lender in the second round. You don't necessarily have to use the bank in which you bank with. It's really a matter of choice. There are also a number of non-banks that are processing these as well. So it's really what you're comfortable with. Everybody is taking their own approach. Ours is much more personalized and local. Others are doing more broad brush with, you go on a website, you submit it, you never talk to anybody. So it's really a matter of choice for you as a business owner, exactly what you want to do.
Okay, we have a few more questions rolling in. First one is it necessary to add the other costs for use of funds if payroll will be used for 100% of the loan?
It is not. And so what we recommend is use that calculator that we developed. It gives you an opportunity to forecast what you think your expenses are going to be over the next several months. It's really there to make sure that you're going to have enough qualifying expenses to get full forgiveness. Remember, there is the potential that your forgiveness amount could be reduced, either because you reduce the number of employees or maybe you reduce pay to certain employees. So I think of that 40% as a cushion. And so what we do when we go through the forgiveness application process is we first look at your payroll. And in most cases, your payroll over that 24-week period of time is going to be more than enough to show use of funds. But in the event that it's a little bit short, then we start looking at those qualifying expenses that are easy to document: utility payments, lease payments, things like that, less controversial, very straightforward. And in almost every case, that gets us to 100%. So it's best to document everything during the covered period. And then when we get to the forgiveness application, we can figure out what we need to use. But we start with payroll and then go to the easiest to document as we need it.
Okay, great. Okay, next question. Somebody applied for the latest California, I think the California Relief Grant. Does this PPP round 2 loan and the California Relief Grant nullify or penalize each other? And
they don't.
They are mutually exclusive. Yeah.
They are mutually exclusive. One's a state program, the other is a federal program. I'm not aware of any restrictions in the grant that says if you got a PPP loan, you're ineligible, and it's completely separate from PPP. The only grant which can negate you is the one I mentioned earlier, which is for the venues that have been shut down. And I'm not aware of anybody locally that's impacted by that.
Okay, thanks for that. Next question. I have no employees, so can I use my Schedule C to compute the loan amount?
You can. And so what you will do then is you will take, it's what we call income replacement. And so the amount of your income in either 2019 or 2020 is what you can use. And we will take that as though we treat it like it's payroll effectively. So let's say you made, for easy calculation, let's say you made 120,000 in self-employment income last year. We're going to take that 120. Remember, only 100 is the maximum. So we're going to have to reduce that to 100, divide by 12, multiply by 2.5. And that's basically your loan amount. Remember, if you're in the hotel or restaurant industry, the multiple is 3.5. And that applies whether you're a C Corp, an S Corp, partnership, doesn't matter. If you are in those industry codes, you can use 3.5 instead of 2.5.
Fantastic. Folks, anybody else have a question? Jeff, I think you were so thorough in your presentation that you answered most of the questions, because I'm not seeing any more. I really want to thank you again. Oh, I spoke too soon. Here comes one more. Can you borrow more than the loan amount available if the forgiveness expenses add up to more?
No. So you will calculate the amount in which you are eligible based upon your payroll costs. And that is the maximum amount that you can borrow. Also subject, remember, to the 10 million limitation if you're round 1, 2 million limitation if you're round 2. So the only way you can go above your calculated loan qualification amount is if you are refinancing an economic disaster loan, and you can then tack that on again up to those maximums. But, you know, we try to structure it so that your use of the funds will more than cover what the loan forgiveness amount is. But just because your expenses will be higher under the forgiveness calculation doesn't mean you can borrow more. The amount that you're able to borrow is subject to that calculation that I showed earlier.
Okay. He's asking, forgiveness can include what other expenses, and I think in addition to payroll, mortgage, utilities.
It's pretty much what we went through in defining the other 40%. So again, the 60% minimum applies, right? It has to be payroll. But beyond that, it's what I showed you there in definition of the other 40. So we take the payroll first because that's already documented. That's pretty straightforward. And then we use additional expenses as we need them to get you to the amount that you need to qualify for full loan forgiveness.
Great. And just to remind everybody, if you have questions, Friendly Hills Bank has put together, you know, several of the documents, including the application you need and the payroll calculator and some other really great information, and you're able to access that from friendlyhillsbank.com. Anybody can.
And we know that people across the country are jumping onto that and using that calculator. I've gotten calls from banks in Iowa with questions about the calculator that somebody found on our website and they're using for their application. So yeah, you can use it. You don't have to be a borrower through us to use that. We provide it for everybody in the community.
Well, speaking of that, we are very grateful to have the partnership that we have with Friendly Hills Bank. Your tagline is do business locally, and we are fortunate that you are Whittier-based business and been a longstanding partner of the Chamber, and we appreciate that. Jeff served on our board for a number of years and has continued to be an important partner to our Chamber. So thank you again, Jeff. This was great. We have one last question. Bonus was given to employees at the end of the year. We are filing for 8 weeks. Should we add up all the bonus for 2020 and include it on the cash compensation?
So I'm not sure if that question is applying to a loan application or a forgiveness application. So I'm going to answer it both ways.
Okay.
So if it's as it pertains to the loan application, then yes, that bonus is included in that time period of calculation. So your, let's say it's a bonus you paid right at the end of 2020. If you're using your 2020 payroll as the basis for calculating your loan amount, then yes, that would be included as part of it. If we're talking about the forgiveness application, it gets a little more specific in terms of it has to be something that you paid within the period of time of your covered period. So between the time that you funded your loan that your loan was funded and the time that you cut off your covered period for your forgiveness application. So as long as it's within that period of time, yes, it does count. There have been instances of businesses that have paid bonuses in order to fill out the final use of the funds that they received and make sure that they qualify for full forgiveness. If it's outside of the covered period, it won't help you.
Okay. I think we're good then. Once again, thank you everybody for joining us today. Jeff, we really, really appreciate the partnership we have with you and really appreciate your very thorough presentation.
Well, if I could just say before I go, Carl, we appreciate everything. You and the Chamber have been working so hard through this pandemic in getting our local businesses information, getting them to the resources that they need. It is such a challenging time. So I appreciate the comments about being able to have a local community bank, but we are all fortunate to have such a strong local chamber that works well with our city and is so resourceful in all the different things that people need. This is a tough time to be a business owner. I don't have to emphasize that anymore with anybody else on this call. And I understand I'm running a small business too. And having the resources of the chamber is invaluable at this period of time. And it's just natural that a chamber and a local community bank should have a good partnership, and we enjoy working with you as well.
Thank you. Thank you, everybody. Have a wonderful weekend. I hope it's a 3-day weekend for a lot of you. And please continue, if you have questions, to reach out to the chamber. We are we're accessible, and we are definitely here for you to help in any way we possibly can. Just a reminder, if you haven't looked into the Whittier Relief Fund, please check that out on our website. It's available for small businesses that generate sales tax revenue or in the personal care establishment industry. So please look at that if you haven't already. And we just released a really fun Chamberopoly game today that allows you to get to know a lot of the businesses locally and learn a little bit more about them. Jeff happens to be on there, as well as many of you, and it's just a fun way to get to know the businesses in our own backyard, and gives you an opportunity, there it is, to win $1,000. So please help us spread the word. You start at number 1, which is the Chamber Go Shop Local, and you go to each of the squares and do what the questions and answers, or what the questions ask of you. You find the answers there. So another fun way to get connected. But wishing everybody a great weekend. Thank you so much. And Jeff, once again, thank you. And
you're welcome.
Bye, everybody.
Bye-bye.
Bye.